Hi, I'm Dave King, and I wanted to talk about the value of investment advisors. Uh, it's fairly common. The people reference Vanguard and information from it on the value of an advisor. Vanguard offers an advisory service. It's basically, they say they charge $30 for every 10,000 invested. So if you have $1 million account, that'd be $3,000. So small, percentage, but that definitely adds up over time. I mean, the power of compounding is if you paid $3,000 every year, you're actually paying a significant amount of your potential net worth out for an advisor. So, I mean, where does this value that our friends at Vanguard say it comes from? One is the suitable diversification, and they actually say that could be 0%, because that's actually something you can do yourself. They say half a percent on choosing low index products. Again, so the cost of advice can decrease the amount that you have. And that's also for the managing of your pooled investments, whether it's an ETF or uh, mutual fund. And what you want is essentially to lower those fees, including those of advice. I mean, so you can pick uh, different S&P 500 funds, for example, and choose ones with lower prices or expenses. The asset allocation between taxable and tax managed accounts. This is basically mixing your money between 401ks and Roth IRAs or brokerage accounts, so tax deferred, tax free, and taxable accounts. And really, the government limits how much you can actually have across the different types of investments. So if you're investing the percent of your income to be able to reach your goals, you're probably going to do that naturally. Uh, Regular rebalancing, I mean, so tracking, and most of your portfolio return is going to be based on your diversification of your assets. That's usually between stocks and bonds, and it's based on your risk tolerance. Spending strategy for drawdowns. This one, yeah, I think is potentially worth it. Uh, it's going to be fairly complex and all the tax laws, and they continue to change. So when you have reached the point of retirement, it could actually be worth that. But then this isn't something where most people will be doing. It'll only be people that are retired that are doing that. So behavioral coaching is where they say most of it can come from. And that's basically avoiding, you buy low and sell high, and that's the consistent advice. But people generally see the stock market going up and they'll buy high, and then they'll get really nervous when we see a crash and sell low. So behavioral coaching is essentially doing that. Is just realize when you're investing money, particularly for retirement, you're doing it for the long term, and over the long term, the stock market will essentially bounce back. So you can again do this yourself. And then one of the things that they're not saying, and even in Vanguard's cost, is how much does this advising cost? I mean, so if you look for someone that's just going to charge you a flat fee, that could be around $10,000. If you do just an hourly fee to get a plan, I mean, it's still $100, $300. And then how long is it going to take you to get your answer? A lot of it's going to be a percentage. Vanguard's is less than this, but 1%, right? I mean, so if you are adding a value of potentially 3%, and a lot of that you can do yourself, they're actually costing you about 1% of your assets. So again, when people are talking about advice and its value, you also need to look at its cost and what you can essentially do for yourself. And for based on a 1% cost, there's nothing that they're really adding if you can, avoid making mistakes and think through a plan that you can just do on your own. And so, the average investor probably trades too much and will make mistakes that can be avoided in behavioral kind of coaching. But you can do that yourself, and the cost of that advice is going to decrease your total net worth in the time frame to be able to reach your goals for retirement and other things. Potentially, when you reach retirement, to be able to help you with some of the tax advantage withdrawing and saving you money, that may be when you want to hire an advisor. But before then, pay yourself, take that time to do the right choices that you want, and then be your own advisor and save yourself a lot of money.